Hello and welcome to Fidelity Connects, a Fidelity Investments Canada podcast connecting you to the world of investing and helping you stay ahead. How's the AI trade going? Where to invest in growth? And will the upcoming U.S. presidential election affect the broader economy? Portfolio manager Mark Schmehl answers these questions and more on today's episode. Mark says we are currently in the digestion phase of the AI wave. He says everyone is invested in AI, but nobody knows what the next big innovation will be in this space and what demand will look like. Host Pamela Ritchie says now that some tech stocks are cheap, will he buy into the dip? Mark says no. He has seen this happen before and says you're not going to miss out on anything. There will be other places to make money and invest. Besides AI, for Mark, he is invested in healthcare, which he says people have ignored but is doing well in a choppy economy. He's also invested in non-tech growth stocks like home builders and biotech. His biggest worry is a potential recession, which he says a lot of companies are not planning for but should. Mark says overall, he doesn't think the consumer is in a great spot, but for now is okay. He doesn't quite know what the pain point will be that will tip the market in a potential recession, but he says he's keeping an eye on it and investing in other areas that are not necessarily AI related. This podcast was recorded on September 10th, 2024.
Welcome back, Mark. Great to see you. Hope you had a good summer.
I did. How are you?
I'm very well, thank you. Very well. It's great to see you, and it's great for everyone here joining you. Very interesting to talk to you about the AI trade, which has just dominated and blown away everyone through the first half of this year, at least. Where ultimately does it sit across portfolios for you at this point?
First of all, the AI trade was really great for me. I pretty much harvest the entire thing. The way I think about AI right now is I feel like we're in a digestion phase, especially on the hardware side. Every large company in the world, actually the 7 largest companies in the world, decided to spend as much money as possible to build AI servers. And it feels as though that can't really get any better. So the question then becomes, is this the peak of the cycle for hardware? Does it continue? I don't know. I think a key component to figuring out AI from here is what does demand look like? So everybody's decided AI is the next big thing. And the question is, well, what are we going to use it for? And nobody really has a good answer for that. So when you discuss this with the companies, it's like, well, we're going to do a co-pilot, or there's 2 use cases that we currently have that people like, which is the coding one and contact center. But most companies, Fortune 500 companies that we've talked to, and including ourselves, everyone's messing around with it. And it's not ready for prime time in any way. So if you use Copilot or what, it's just not. It saves you some time, but it's not transformative to your work process. And I think that what we require is, in order to justify $200 billion in capital spending every year for the next 5 years, which is what NVIDIA is discounting, you need some transformative stuff, and we're not seeing it. So for me, what I'm basically saying is this is digestion. It's time to digest the capital spending and see if we get a demand cycle for AI purposes. And so far, we're not.
So the response of many investors right now is, okay, that seems to be the period of digestion. The stocks are falling in a lot of cases, and then getting bid back up again. So do you buy the dip, or is it what's the timing here?
So I'm not buying any of these dips. I've watched this sort of thing happen before. And, when you do go into a digestion period, if you've had a super cycle, there's no rush to get back in. You're not going to miss anything. And there's going to be other places to make money. And it feels to me that the best places to make money will be to find those companies that eventually use this technology to do something transformative, not the hardware guys. And so, a lot of the tangential or second tier hardware stocks have really corrected a lot. So for me, it's like, let's just step off the ledge, step to the side, and then start looking at other things. And, it was a great trade, fantastic trade. There's other places to make money. And moving on from AI. I mean, AI is everywhere. Like everybody I know is NVIDIA.
So it is
mom and pop, everybody.
Is it related, Mark? I mean, it seems actually like the Mag 7 essentially weren't too bothered with interest rates going up or down because there's a whole different story. But is it connected to a cycle in the economy at all? I mean, can we put the two together? What do you think of the economy? Is Nvidia going down right now because there's an economic reason, or are they not connected?
No, they don't seem to be connected to the economy. Those 7 giant companies almost seem bulletproof. The cash flows they generate are enormous. They are monopolies in all their spheres. They are spending a lot of money on AI capex, and maybe they start spending less, but they seem to move independently of the economy as if they're completely immune, which they probably are not. And they're treated almost as an asset class, like you just buy them all, which is also weird.
Is it? Okay, how come that's weird?
Yeah, well, it's just that like they are fundamentally different companies with different businesses, but they are dominant in each of their domains. And I don't know. I don't know what breaks that cycle. Fundamentally, as a stock picker, I hate the idea of the Mag 7 because it kind of just makes what I do pointless. Why don't just own the 7 biggest stocks and just go to sleep at night? And so, structurally, I always want them to lose. So far, they haven't been. But we'll see. Right. We'll see. And I think a lot of them did benefit from the AI wave because they're all like spending money on AI and they're going to transform our lives with AI. And I think AI is going to disappoint. And so we'll see what that does to the Mag 7. And structurally, in all my funds, I am underweight all the Mag 7 stocks. It absolutely is hardware all over the place. But for me, Apple is, if you want to play AI and you don't know what application is going to work, which I don't, and I've seen like hundreds of small private companies working in the space. The nice thing about Apple is you get AI for free. So the new phone is not exciting. Maybe next year's phone will be better.
It looked like a great show, though. It was a great show.
Oh, it's always a great show. Okay. But let's say somebody invents a cool new AI widget and you need the new, not this year's phone, but next year's AI Apple phone to run it, you're going to buy the new phone. And so with Apple, you sort of benefit from AI in a dumb way because they'll just sell more phones because somebody wants to download the cool AI widget that they saw online somewhere. And I don't have to worry about picking the individual stock that has the widget, although hopefully I'll get that one right too. Apple just benefits. Plus, Apple's incredibly defensive. So if we do have a continuing choppy environment, Apple's like a staple. Apple is a great two-way stock. It will benefit a lot from an AI wave if we have one. And it's defensive if the economy continues to be choppy. Not sure what's going on. So for me, Apple it's a great stock to own at the moment. Okay. And I'm getting AI for free. And they're not investing in the AI. So they're not like pumping out CapEx to buy NVIDIA GPU. So I don't have to worry about future write-downs of inventory if AI doesn't work. I don't know. Apple seems like a really great place to sort of sit and wait to see what happens.
So just back to, we'll actually talk more about staples in a second, or the general idea of that and how that works as an investment. But I just wanted to pick up on the widgets there. So this is sort of the killer app discussion, and maybe it'll be distributed on phones in different ways. But that killer app / widget companies that are working away at trying to develop that, you have insight into that none of us do. What's going on there? Is that working through? I mean, you say you have no idea, but you must have some idea of what people are working away at here.
So there's some really cool companies. Like one of them is Perplexity. If you've used it for search, it's a great piece of software. I use it all the time. I almost don't use Google anymore. So there are some companies utilizing AI in very great and unique ways. You could look at ServiceNow. Has some really great AI tools. The problem ServiceNow has is their great AI tools are eating away at their core business. So it's sort of this is a problem with all software. So a lot of these software companies, they will bring out cool AI widgets and then they lose on one side and they gain on and they don't really win. There's a couple of private companies that have some really cool generative AI stuff that people are using for video. But again, that's like for the super cycle to really work, you need, corporate the Fortune 500 to really start spending on AI that changes workflows and really reduces costs. And we're not seeing that. And when we start to see it, I think that you can get excited about AI again. But at the moment, it's just not there. So yes, there's some cool things. I'm not bearish on AI. I actually like AI. I think there's going to be a lot of really interesting tools and widgets, and it's going to change our lives in fundamental ways. I do think that we've spent a lot of money on AI, and we may not get the returns we were hoping for, and the market needs to figure that out.
And throughout the year, we spoke to you, I think it was spring or summer. Even at that point, you were taking some chips off the table. Maybe
Absolutely.
Just describe, you said you harvested it all, but let's go back to that. What were you doing at what point?
You can sort of get a feel sometimes for when something is getting crowded, and I almost couldn't take it anymore. Like the stocks were going up so fast, and it was
Right.
It was making me ill because they were going up so fast, and I was like, I have got to take some money out of it. I couldn't handle it anymore, and so that's what I started doing. And I'm not alone. There were a lot of other folks I was talking to who had the same thing where they sort of got the whole wave, and they're like, I just can't take it. I gotta sell this now. So that's sort of why I was doing it. It was basically a gut instinct. There was no reason to. Fundamentals continue to be strong. They're still strong. I mean, NVIDIA's have put up a huge quarter. There's no reason fundamentally to say this is all over, but I just started to feel ill. I couldn't take it anymore.
Right. Okay,
and now I'm looking at this economy where it's like the economy's
Let's talk about that. You mentioned staples before, one company being kind of like the tech staple, but there are a lot of other companies that fit into that bucket. Are some of them, they must be growthy if you're going after them. Take us there.
I've got lots of non-tech growth stocks. I love home builders. They are secular growers, and they're not priced like secular growers. People still think of them as cyclical. Well, in the United States, there's just not enough housing anywhere. We need to build a lot of houses, and these guys are going to benefit from policy, and they're going to benefit from demand, and they're going to benefit from falling rates. This is a great group. So that's another place you can go. I own Walmart. Walmart's just a great company executing well, using technology to change, how they operate. There are lots of growth stocks that aren't AI.
Interesting. But are also like staples / defensive. I do feel like everything's changing around. You could also say when you have to buy or upcycle to something just because you have to, it kind of takes the fun out of it. But those are good staples.
Healthcare hasn't worked in forever. There's a lot of relatively cheap stocks in healthcare growing relatively well. I think that everyone gets focused on the same things, right? It's like, we're going to own Mag 7, we're going to own AI, and that's it. But there's other parts of the market that are doing just fine. Thank you very much.
Okay, well, that's awesome.
That's where I'm moving.
So some of the questions that are rolling in here are So, is the AI train perhaps coming to a halt? What could be the next rotation opportunity? You're talking through that right now, so that's a question coming in. I'm sure you get that a lot. This is a question. Views on robots, please, and how they fit into our day-to-day lives. Any investment opportunities in this space, Mark?
I love that robots thing. It's so funny. People talk about robots and Tesla and AI. So I like the idea of robots, and I think that AI ultimately makes them closer. One of the things I've recently learned about robots is nobody can make hands work. And so if you can't make the hands work, it's really hard to have a robot that works. It's not the brain, it's the hands. So these are the things you don't know, right? Like you sit there at home and you read about this, robots be great. And then you start talking to robot companies and they're like, yeah, the hands don't work. Like hands, these things. Yeah, they're not ready. They're just not ready.
They're just not ready. They got to get the hands sorted.
It's like fusion, it's just not ready. So no, I'm a no to robots, a hard no. Unless you're talking about Fanuc, which makes the giant crane things that lift and do things like that. Yes, I'm a yes to that. But like the little robots that like will vacuum your house, I'm a hard no for now.
Hard no for now. Darn, they could be so helpful.
That'd be great.
In time, I hope that works. Your views on energy markets, commodities. When we spoke last, there was a discussion of nuclear, and I think the whole power of the AI, the whole data center story, how are you going to power them to bone up for the AI coming. Is that as big as we have all been led to believe, or what are your thoughts there?
No, it's a hard sell. So that whole power thing, so I like nuclear. I think it's a solution for global warming. It got wrapped up into the AI data center trade. There is so much stranded power floating around that you don't know about that is available at prices 25% higher than they currently are. I think there's tons of power. People are going to find it. They're going to take like their Bitcoin mine and turn it into an AI data center. I think that like a lot of these power stocks just went bananas.
Yes.
Because we had companies like CoreWeave, who is a data center AI play, say like draw these charts where power is just going to go like straight to the moon. And you should invest in CoreWeave because they have power. So I think that trade is over. Capital O.
Okay.
And I am nowhere. If you make power equipment, I don't want any part of that stuff.
Okay.
I just think it's like ridiculous. Anyway, yeah.
So does that encapsulate commodities as well at this point, or
no? So the power thing was data centers and AI.
Right.
Commodities are driven by China. China keeps getting worse.
Okay.
I think that it's not the best place. I think you can definitely make an argument that copper is probably better than most of the other commodities because you do need it to electrify, and we are going to electrify. And its supply is a little bit damaged, so maybe copper is okay. But in general, commodities are like it's China, and if China keeps getting worse, commodities go down. So I don't think commodities are your best bet.
Okay. Another question coming in. This is, so Global Innovators is one of your funds. You go global. You play in the sandbox globally. Are you putting, Mark, most of your focus on U.S. opportunities or any opportunities, globally?
Most of my stuff is on the U.S. It's like, call it Fortress North America. It's, relatively politically safe. We've got all our own energy. I don't have to worry about conflicts. There's two giant oceans between us and everybody else. It's got the most innovative markets, the most innovative people, and it's the best market to be in, and it has been for 10 years. So for me, a lot of my time is spent in the U.S. Now, with the AI trade, I did own a lot of Taiwan. I don't own a lot of Taiwan anymore. China is not investable. Europe. There is some good European stocks, and I'm doing more work in Europe. But in general, yeah, it's mostly U.S.
It's mostly U.S. Okay, interesting. We'll just pick up on the political question. Sort of almost don't want to ask it, but what does the election mean for your fund, for the way you invest, the way you look at the markets?
I don't think it's going to mean a whole lot. I think that on the margin, a Trump victory is probably good for financials.
On the regulation story,
regulations come down. Maybe taxes come down, but it's country be so broken. I don't know. I think it's a push either way. Okay. So I'm not. The election is not driving my investment thesis in any way.
Okay. Fortress North America actually does include Canada, of course, which you're from.
It sure does.
Thoughts on the Canadian economy and investable opportunities, really, is sort of where we want to get to there.
So it's interesting. I've been increasing my Canadian exposure. Canada's cheap. Canada's ahead of the United States in the rate cutting cycle.
Currency-wise, Canada is cheap?
No, I'd say the stocks are cheap.
The stocks are cheap.
I think the currency is also a push because if commodities go down, the Canadian currency usually goes down. But I think that relationship is not quite as strong as it used to be. There's some good companies in Canada that are cheap relative to the United States. And I think that there's more opportunity there than folks think. And so I've actually been increasing my exposure in Canada.
Okay, great. This is the other question coming in. What is the biggest risk in your mind looking to the next, so out a year, 12 months, sort of medium term?
Well, the biggest risk is obviously if we have a recession, it's nobody's ready for it, and nobody's really pricing it. I've asked that question. Yeah, I've asked that question at the tech conference to every company I've met over the last 2 days, and the first answer I always get is, "Well, we're not planning on that."
Right.
So,
often
really
no one
bad.
is. Yes. Okay.
No one is. I'm not planning on it, but I want to be ready in case we continue to weaken. I'm not super bearish on the economy. I'm somewhat bearish on the AI capex cycle, but the rest of the economy is kind of just, meh. Okay. And it might stay that way for a while. So that's a big risk. Other big risks, there's always geopolitical. I can't do anything about that. And yeah, that's it. For me, the big one for now is the recession or not.
Okay. Can I take you back to the discussion ultimately on healthcare? Because that sort of leads into, it's often an evergreen area. If there is a recession, there isn't. It's actually acted not that evergreen recently, but what do you like inside of healthcare? Be more specific.
Everything.
Really?
Everything.
Okay.
Oh my God, the whole sector is cheap. It's sort of like people took their healthcare and bought the Mag 7 stocks.
Wow.
And they left healthcare for dead. So healthcare really struggled after the pandemic. Cyclically, a lot of these companies struggled with massive inventories. Big pharma is not well loved. Even stocks like Lilly, which has worked. I mean, they have a wonder drug. It's still not expensive. So I just feel as though it's a sector that's been ignored for a very long time. Biotech hasn't worked for 10 years. And
I mean, biotech is pretty binary. Is that a place where you look?
100%. But there could be an innovation wave, right? Like, what if you start using AI to do better protein analysis or something? I don't know. I just feel like it's ignored, hasn't worked, and it has not tied to the economy. So I own a lot of healthcare. And in general, like the biotechs I've owned have done very well, sort of under the radar. And if you get a rate cutting cycle, biotech does very well. Also, companies that have relatively stable cash flows and a rate cutting cycle are going to do very well. That's healthcare. So I don't know. I think that healthcare is actually a really great place to be investing, especially in a choppy, economy.
Okay, fascinating. A couple other questions rolling in here. So any additional thoughts on decarbonization, the trade, hydrogen vehicles, and carbon capture / storage? Anything of interest there to you?
No, none of those seem to work. The problem with a lot of that stuff, and I always get excited by it, but these are big company problems that require lots of capital and big company resources. And they're usually championed by small, like 30-person firms. And there's a huge disconnect there. Like you need Dow or Exxon to like put some giant capital behind some of those plans to really make them work. And so they're very difficult stocks. I mean, you could go buy Exxon and you'll get some carbon capture but it doesn't really move on that. So in general, that whole space is just not investable. I own some uranium as a carbon offset, but yeah, it's a tough investment slog.
Okay, interesting. And then here's one other one: cybersecurity. So looking at opportunities ultimately across this space.
Cybersecurity is hard. So there's a lot of companies in it. The technology changes all the time. It's one of those ones I seem to get wrong a lot because I buy one and then it blows up because someone else came along with a better widget. So it's never been a big investment part for me because it's so difficult.
So tell us a little bit about the consumer. I mean, this gets back to sort of where you think the economy is, and ultimately, it sounds like you're staying away from sort of the cyclical story. But just a quick word on the economy, and then I guess a final word for investors here today. But yeah, let's just start with the consumer briefly.
So consumers not doing great. Inflation's falling, so that's good for the consumer. Yeah, the job prospects are getting worse and salary expectations are coming down. I'd say the consumer's okay. Like in general, their balance sheets were okay. It's not this where the source of pain is. And that's why I struggle with this, like with a recession call, is because normally it's because the consumer rolls over and dies. And it doesn't look like the consumer's going to roll over and die. It looks like they're getting more cautious though, for sure. but their balance sheets in general seem okay. So I don't know. I think the consumer is okay. I could be proved wrong on that. But every time that gas goes down, that really helps the low end. And so it doesn't feel like that's the source of the problem. We have an awful lot of government spending, and maybe that slows down, and maybe that's where the problem is. I don't know. But in general, I think the consumer is okay.
Okay.
Ish.
So in terms of what you'd like to leave investors with, the growth, the innovation story might be found, it sounds like you're saying, in places other than AI. It's all over the place, just not perhaps where everyone thinks.
Whenever you get these, so I'm reminded of 1999. So in 1999, the internet bubble blew up, but 80% of the market went up. So there are all kinds of places to invest in. And what happens is everyone crowds into the same 50 stocks and leaves everyone else for dead. But there's lots of good stories out there still working just fine. There's stuff in healthcare, there's stuff even in tech. Yeah, I do think that the markets can work just fine, even though AI starts to falter. And I actually think that'd be really healthy, because I think that there's a lot of, what's the word? Stupidity in the AI investment cycle. And, we need to sort of flush some of that away and, so let the real winners emerge. And so anyway, there's lots of stuff to invest in. I have tons of great ideas. Yeah, no, clearly. And you've shared a lot of them with us and given it to us straight. Mark Schmehl, we depend on it. I'm grateful for it. Great to see you. Have a great time at the rest of the conference today. Thanks for fitting us in. Thanks, everyone.
Thanks for listening to the Fidelity Connects podcast. If you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/how-to-buy for more information. While visiting fidelity.ca, you can also find information on future live webcasts. And don't forget to follow Fidelity Canada on Twitter and LinkedIn. Thanks again. See you next time. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada, ULC, or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments.